stars, but we need to get back to the equity markets because the big trigger that everyone's going to watch out for later today is the ICICI Bank numbers, and the numbers will come post-market hours, so we will only react to them on Monday. But there is some amount of trepidation ahead of the numbers because the stock is seeing a sell-off amidst huge volumes. Siddharth Purohit of Angel Broking joins us now. He tracks ICICI Bank closely. Siddharth, hi, morning. What is the expectation from the bank this time in terms of the key parameters like the asset quality, the NII, slippages, etc.?
Good morning, Sonia. As we know, Q3 was a difficult quarter for ICICI Bank and the banking sector as a whole. This quarter again we are expecting similar trend. We don't expect any relief from asset quality for this quarter. And as we know that ICICI Bank had not recognized some of the AQR accounts and that is likely to come in this quarter as well. So what we are basically expecting that similar amount of slippages what we saw in Q3 to the tune of 6,500 CR is expected as slippages in this quarter, and overall stress is likely to remain on a higher side, and that will take a toll on the earnings growth, and that is why we are expecting that there could be a higher amount of interest reversal during this quarter, and hence we expect that net interest income could grow somewhere close to 8 to 9% only. However, there could be other income on a higher side because of dividend from overseas and subsidiaries, as well as your recognition of stake sale from their subsidiaries, and that could support the bottom line to some extent.
Okay.
So what basically we are expecting is that bottom line to be more or less a very flattish growth of around 4.5% for this quarter, and to the tune of almost 3,020 crores for this quarter.
What do you make of management commentary? I mean, do you think that there could be some accelerated recognition of what might happen in FY17? Because management was not sounding very positive on FY17 either.
Yeah, that's what Lata, that as we saw in the few more banks account also, in case of Axis also, that since they had already recognized large part of AQR, then also we saw slippages number coming up in a big way, and there was disclosure of a large amount of stress account. So similar thing can be seen in ICICI also, and possibly other than AQR also we believe that some spillover could happen in FY17 also in terms of NPL recognition, and that will keep the provisioning numbers very high than what we were expecting earlier. And that is why we are little cautious on the earnings front.
Okay, so what do you do with the stock now? I mean, the stock has been, one of the biggest disappointments. If you look at the last 12 months performance, even this week the stock is down about 6% odd. It's come off quite a bit from its 52-week highs. So do you expect to see more pressure purely because of the reasons you alluded to?
See, if the disclosure number are little on a better side, let's say they are able to quantify the amount of NPL that is likely to, come up in the next 1 year, let's say, and then possibly that will be taken in a positive way rather than negative, I would say. So if there is more clarity in terms of asset quality, that what is the quantum of asset they are looking forward to be recognized as NPL other than the AQR accounts, then I think that will be taken as a positive thing. So we'll watch out for commentary from that side from the management. So if you see since last quarter, there has been some amount of uptick in the stock price, but I think at the current valuation, before taking a further call or maybe upgrading the stock, we would closely watch for the Q4 numbers and the guidance for FY17, because the crucial part is your provisioning number. As far as our numbers are concerned, we are really not upbeat so much on the FY17 growth number based on the current scenario. However, based on more disclosure, we have the options to upgrade and maybe expect better earnings going ahead, but we'll clearly watch for guidance from the management. So as of now we have a neutral stand on the stock. We are not really very positive. However, we'll wait for management clarity before taking a further call on the FY17 and 18 earnings.
All right, we'll leave it at that, Siddharth, and touch base with you after the numbers come. At this point in time, market clearly troubled. I mean